Okay, here's a look at the emini S&P for Thursday, July the 7th, 2011. We're looking here at the market profiles, which include the regular trading hours, which you see here, today's regular trading hours session, and this is yesterday's. The one in the middle is what occurred overnight. And we had mentioned yesterday that depending on how the reaction came in the news, that the up auction could continue and that the next target would be probably in around the 1350 area right here. Well, overnight the market hit 49.75, backed off a little bit, opened here in the regular trading hours, and was mostly bought up with a fairly tight range today, but still in a upward bias. Today's range, I think, was only about 7 points, something like that. 8.5. So just a very quiet day, but still maintaining the upward bias. And so we still have a preference to trade from the long side. And as far as a good entry location right now, should it dip down, would be in around the 1348, 1349 area, with an expectation of the market's next target around 62. Here are the market profiles, including the last, this is from last Friday. This is last Friday here, then the holiday shortened session on Monday, Tuesday, Wednesday, and then today. So nice gap up here and continuation. So market still looks like it wants to keep going higher. With that knowledge, we were still able to make some trades today, although our actual trades only set up two. One was a short, one was a long. Obviously, we weren't going to take the short trade in an intraday up auction and with a neutral filter and not butt it up against any kind of known resistance. The long trade here, unfortunately, didn't get filled until very late in the day. And as you can see, all of our long trades are identified with the dashed blue line. Also, of course, shows an up blue arrow, as you can see right here, as well as in text, the actual price is stated right on the chart. Obviously, we tried to get into the trade here. It came within a tick, so no fill. This one was rather late to trade, although many of our traders did take it just because of the strong underlying intraday bullish directional bias in the market. So it actually turned out to be a pretty nice trade, getting long there in the 1349 area, and then having a nice close up there at almost at 52. Other than that, for the traders that weren't prepared to enter that late in the day, there was actually no trade actually triggered that we got into, because there was only two trades set up, and of course one was a short and the other one just came within a tick of getting filled here, the ideal time right here. So not a lot to report on that basis, other than we do expect the market to continue higher. The one thing, of course, we do need to watch for tomorrow is the employment situation news, which will be released at 8:30 a.m. Eastern Time. And so we're going to be watching that, because more than likely the market will get volatile at that time. It usually does when the employment situation numbers are released, with the background of the economy and lack of jobs, high unemployment rate, and so forth. So that'll be a number to watch. Unless the number is really bad, I expect the market to continue higher. It could certainly gyrate around a fair amount after the news. But we'd still maintain that upward bias. With the ideal entry right now down in around the 48, 49 area, and we're looking really in the low 60s, 1360s, 62 area as the next target up. So a relatively quiet day in the daytime frame, but some good opportunity for us in the pre-market being the 1 hour before the regular trading session starts, when the market did rally up after that news. So that's really it for today. So any questions or comments, just get a hold of us at info@eminidaytrader.com. Our phone number's on the website. Always enjoy hearing your questions and comments. So that'll be it for today, and watch out for that volatility tomorrow after the news. Otherwise, we'll see you tomorrow. Bye.